get started. My name's Chris Roper. I work with Flower Hill Institute. Flower Hill is a native-led nonprofit based in Jemez Pueblo, New Mexico. We do a lot of technical assistance and outreach for various programs for USDA. So we have staff all over the United States. We're trying to wrap up here at the end of the year. It's been a busy conference season for us all. We know that lots of travels have been happening, lots of conferences have been happening, but we knew this important topic. We wanted to work with our team and try to get information out to you here before the end of the year. Dan Cornelius is with us as well, and we want to make sure, and we'll let Dan introduce himself, and we'll start diving into some of the subjects here. Dan, take it away.
Thank you, Chris. Well, welcome everybody. My name is Dan Cornelius. I'm a member of the Oneida Nation, and coming today it's December, and we're still harvesting corn in the Great Lakes region in Wisconsin. We're at a field with Ho-Chunk today, and it's kind of crazy to be harvesting corn in December, but that's just kind of been the year that we've had. And I wanted to cover a couple of different points today before we turn it over to Darrell, who's going to talk about end of year financial considerations, particularly looking at taxes. But I wanted to share a couple of opportunities, and I know we probably have some people from across the country today. So a couple of things that I was going to talk about are more Wisconsin or Great Lakes oriented, but I wanted to also share that that some of those opportunities are similarly going to be available in your local areas. So the first thing that I wanted to share is that we have launched a tribal elder food box in Wisconsin with producers from across the region, and that was funding that we were able to secure from Feeding America. But for the next 3 years, it's going to be supported by something called the LFPA, or the Local Food Purchase Assistance Program. And so I wanted to share that even if you are in a different region, that there's a lot of these LFPAs either that states have or tribal governments have. And for us, it's been an excellent opportunity that we've been able to provide essentially a guaranteed market for our tribal growers at a fair price for food that's feeding the community. And so that was one thing I wanted to share. And then if we do have folks from Wisconsin and the Great Lakes region, also wanted to say that we have currently a producer grant that's open. We've got just over 110,000 that we're putting out for those. And really, this is for people who've been part of Tribal Elder Food Box, or who may potentially be able to be or would be able to source for it. So that was the first point that I wanted to mention. And I think for some of the folks on, I had sent an email out on that. If anyone would like more information on LFPA more broadly, I'm happy to follow up with you. The next thing that I wanted to share, and again, this is for the Great Lakes region, is important, where we've got a lot of maple syrup producers, and the sign-up deadline for the USDA Farm Service Agency for the NAP, that's a non-insured agricultural products crop insurance, it's December 31st for SAP. The spring harvested crops, so any anything of specialty crops, that's going to be March 15th. But really just wanted to share for folks that now would be the time to get those applications in, and you really just need to go into your local Farm Service Agency office, because you got to sit down and they'll kind of run through what your operation is. So I would say kind of time is of the essence, given we got the holidays mixed in. Hopefully the week in between Christmas and New Year's, that there'll be some folks in. But if you are interested in that, I would go ahead and this week just contact the office and at least just get your application in. They can do some of the background work afterwards, but as long as you have that application in by the 31st, then you should be good. And you need to have a 50% loss, and they'll pay a 55% on that 50% loss. And it's really, it's for mostly weather related events. I know for our region this past year, it was pretty extreme weather. So it would have been a good benefit for a lot of people to be signed up for that now. So again, that is the NAP, the non-insured agricultural products insurance. One other important note on for Farm Service Agency is the discrimination claims. Those are due on January 13th. So just reminding folks on that you're definitely going to want to look to to get moving on that. It's a little bit more of a complicated application. I know that there are some resources that are out there to be able to help on that. And then I'm going to come back on another FSA note in a second, but I wanted to share another grant opportunity that's coming up is in Wisconsin, the Wisconsin Ag Department just yesterday announced availability of $27 million of funding through something called the Resilient Food System Infrastructure Program. That's another USDA program, kind of a special one from pandemic funding, one of the last pandemic funding programs that they're implementing. And it's going through state ag departments. Wisconsin happened to have a pretty large allocation of 28.25, but 27 is going out for that could be producers, tribal governments, nonprofits, pretty wide array of entities that can apply. But that's just going to be something that, again, you're going to need to really look across the country where you are. Unfortunately, it's going through state ag departments. We had said, well, what about putting it through tribal as well? But I think they were just trying to get the money out the door. But really can cover anything from walk-ins to to transportation, anything really of supply chain related that RFSI can help to fund. And then the other big one I wanted to mention is the Regional Food Business Center. Again, I'm helping on the one in the Great Lakes Midwest. There's going to be $10 million of business builders through that one. And nationally, I know that the Intertribal Agriculture Council has the National Intertribal Center, and they have 42.5 million. And according to USDA's website, 68% of that is going to be going out for those subawards of those business builders. So just mentioning it, those, I think one region has already moved on theirs, but most of the rest of them should be something in 2024. But just wanted to be given some advance notice to be looking at that. And then a couple last notes for Farm Service Agency. Rates right now are varying between about just checked yesterday, 1.875% for a beginning farmer down payment, up to just under 6%. So a little bit higher than they were a couple of years ago, but still it's better rates than a lot of the commercial lenders. And as USDA is oftentimes is going to be able to get some of that funding out for folks that maybe won't be able to get credit from commercial lenders. So I know that Darrell has quite a bit of information to be sharing on year-end financials. I just wanted to hit on a few of those highlights. And if people, again, if you do have questions, you can either ask it in the chat or the question and answer here, or I am happy to follow up with anybody directly if you want any more information on any of those programs. Chris, I'll turn it back over to you.
Yeah, thank you, Dan. Appreciate all that information. There are so many grants. I know on our Flower Hill website, we just did a update on some of the grant programs that are open right now. Dan mentioned those food systems grants. They are open in many states right now. And then if your state is not open today, I would expect that they would have one open here in the very near future. So I'll start to prime the pump for Darrell a little bit. If you're like me, as you get to the end of the year, you worry about your taxes, you worry about how you're going to end up. Tax time is probably my least favorite time of year, and that's why I rely on experts like Darrell Tennie and his staff at the Tennie Group. Everyone needs to be in contact with your tax professional throughout the year. But particularly when you get toward the end of the year and you're thinking about your tax liability and how much tax you may have to pay, or if you're lucky, maybe you're getting some money back. But when you're self-employed here in the United States, you're always thinking about those things, and that's why we wanted to make sure we get Darrell on and let Darrell give us some hot tips on tax time and And then think about your record keeping. You know, as we talk about the FSA programs and really all of the USDA programs, your record keeping is vital. And in order to have good record keeping, you need to tie that together with your taxes. You need to be keeping your receipts together. You need to have financial statements, and all of these things will help your tax professionals get your taxes prepared for you. So as you're having conversations with your tax professionals throughout the year, they can help you know where you stand, if you're going to owe money, if you're going to get money back, and all these things tie back to our professional services that we can get through USDA. If you have a record keeping system of some sort, you can understand where your losses are, or where your where your even your crop yields, all the things that Dan mentioned, understanding yields, understanding inventory numbers for land, animals, crops, crop acres. All these things are so vitally important when we think about taxes and when we think about disaster assistance programs. Throughout the year, you hear us talk about even doing the census, the ag census for USDA. All of these things are important. That ag census helps USDA determine what kind of funding goes into these disaster programs. A lot of us don't like to share what we have or what we're doing. We like to keep to ourselves, but just understand that all of these things work together. We need to turn in our numbers on these ag censuses that come out. That's how we can help make sure that the disaster programs get funded properly. We all like to cast stones sometimes when we look at these government programs that don't have enough funding in them. They never have enough funding. We always see that. And we always face that. But they always have to work with the numbers they have as well. So keep that in mind. Darrell, I'm going to turn it over to you and let you really
Okay.
dive into the nuts and bolts of the taxes and what things that we should be thinking about, when
Okay.
it comes to record keeping and year-end taxes. So
hmm
take it
Okay.
away.
Well, I want to say thank you, number one, Chris, for the opportunity and stuff, and we're gonna briefly talk to you today about some of the things that we're seeing as all day today, all this week. We're getting all the phone calls about everything people should have been doing January 1st. But everybody want to do it now at the end of the year and stuff. So, but the biggest thing, as Chris saying, is getting ready for taxes. Okay. So what we didn't do previously, we're trying to get everybody to do, you got to get ready before December 31st, and it's very proactive. And so I just want to point out, some of the things that we're getting a lot of calls on, and we see that people make at the end of the year. The first thing is making sure you got all your record keeping to make sure your Schedule F is correct. Okay, making sure you know exactly where to file the lines on that Schedule F. We're going to just show you some quick presentations in a few minutes. Okay, one about, like Chris said, record keeping, making sure all your stuff is lining up in line. Okay, receipts. Going back, if you don't have your financial in order already, please gather those receipts. Okay, make sure you gather those receipts and stuff. One thing a lot of people miss is that we get a lot of people coming in now saying, I didn't pay myself this year. Can I pay all my wages at one lump sum? Yes, as long as you're before December 31st. Okay, if you're paying yourself on income, a lot of people will think that you just have to pay myself once a week, once every 2 weeks, once a month, or bi-monthly. Those are the methods of paying yourself. But you can pay yourself an annual payment. Okay, we got clients in here right now who preparing themselves an annual payment. Now, the only thing is, you're only going to file a 943 because it's annually. You only file it annually. But if you was outside of agriculture, you do a 941, you just have to file it in the fourth quarter. But for agriculture, you can pay yourself annually, as long as you pay before December 31st. So if you say you pay yourself $40,000 on December 25th, that's fine, because as long as it go through before December 31st, that was your annual payment, or that was your yearly payment for your farm or your agricultural operation that year, okay, or organization. So we get this a lot. You can pay yourself annually, as long as you pay it. So now, next year, you have paid in your Social Security, Medicare, and you also now have a W-2 for that year. Not a draw, you have a W-2 for that year. So long as you do it before December 31st. Another thing, W-9s, okay? A lot of people are receiving income in their social security number, okay? We tell people to receive it in their EIN number. They say, well, I'm gonna get a 1099, so they're gonna send them name. Long as you call the payee before the issue, even next year, before they issue that 1099, long as you call them and give them your EIN number, it won't be in your social security number. You have to call and give it to them prior to them issuing you out the W-9, okay? Prior to them issuing you out the 1099. We get a lot of that. So these are some of the things that we're doing. Well, we're gonna go through it real briefly and talk about again that sole proprietorship, how we need to do it. Can you bring it up real fast? We're just gonna show you real briefly some of the things that we want people to be aware of. Okay. Okay. All right. And I'm going to skip through some of the slides and stuff as we're showing you today and stuff. We talk about entries and stuff. So for the sake of time, remember, anyone who have your EIN number, make sure you have this letter to see what is your filing requirement. We still have time to change that filing requirement. If you got this letter here, I know that's a sole proprietorship. If it was a 1065 or any other form, it's going to be in the middle. Please go back and pull your EIN letter to see what that filing requirement is. If we need to change it, we still have time to change it before March 15th or before April 15th of next year, okay? We have time to change it, okay? Understanding if you're going to receive money as a sole proprietorship, you are going to be unlimited liable. The money goes to you, not the entity, okay? And if you're in any type of agricultural operation, do not use this form Schedule C, please. And we tell people all the time, gardening, whatever, horticulture, apiculture, cattle, do not use this Schedule C form now. Please do not use this form in filing your taxes. You're going to be paying taxes you don't owe. You're not going to be able to utilize auto credit and reduce your taxable income like you should. Of course, these are all legal expenses, but we're going to go to the farm income expenses. We just had clients came in today. Understand, if you're receiving agricultural income, make sure by the end of the year you classify where did it come from. If you put it on the sales of livestock or other resale item, you're not a farmer. You are a resale farmer, okay? You want to make sure if you're selling cattle, if you're growing produce, if you're raising it, that income goes under line 3, line 2 and 4, sales of livestock, produce, grains, and other products you raised, okay? All right, please, we want people to understand that we are going through that all this week. People are still classifying their production income on line 1. If you classify production income on line 1, you are a reseller. You are a reseller. You're not a production farmer, okay? So understanding all your different program payments, how your 1099s coming in, crop insurance comes. If you're getting 1099s in on these programs, knowing where they came from, make sure we can identify where it comes from. These are all legal farm expenses to reduce any income that you came in. These are all legal farm expenses, okay? As Chris said, record keeping. We want record keeping for that conservation expenses. So we can reduce this money that a lot of people getting for conservation expense. But we also need good records for depreciation. Please do not ignore these equipments, these backhoes, these heavy equipment, light equipment, whatever equipment that you have for your farms, trucks, trailers, you know, stuff to pull the cattle, stuff to sprayers, whatever. No, keep good records on the date you put in purchase, date you purchased, cost, and when it went into operation. We need all those records. So these are all, in speaking of record keeping, in categorization of where these expenditures classify. How do we categorize them? Okay. We get this a lot. I thought I didn't know where to put it. I didn't claim it. There's nothing wrong with misclassification. It's on there. But even if you don't know the exact category that it classifies in, long as you put it in a class of a category, we can always reclassify the expense. And if you ever get questioned about this expense in that category, they don't mind if we got to reclassify. It's when you don't have it, okay? It's when you don't have it. So these are all legal expenditures to help reduce all the money that came in from January 1st to December 21st, the day we in. Now you're beginning to start reducing the tax liability, because as Chris said, we got the records now to offset that income. If you do not see your category here, write it down. If you see a refrigerator, you bought a coolant and you don't know it's equipment, put coolant and the cost, okay? Just put what you bought down and the cost, okay? And saying that now, the Schedule F in all agriculture, this is the only form you use in classifying agriculture income and classifying agriculture expenses, okay? So now we're getting ready to understand the Schedule F. So this could be a kind of an outline, okay? Try to identify if you bought something for resale. Okay, what did I buy for a resale? Okay, I need to see because I bought this and I sold it. Now, again, what was my cost on it? Okay, now, sales allowance, if you sold cattle, get those records, keep those records. But if you sold those cattle that you raised, be prepared to understand you should see income on line 2, okay? You can see income on line 2. We just had a client, income was on line 1. He said, wait a minute, I raised this cattle. So we getting that straightened out for them. Agriculture program payments identified, making sure, am I going to receive 1099s for corporate distribution? Am I going to receive 1099s for agriculture program payment? Did I get a CCC loan this year? Okay. Okay, if I receive crop insurance, make sure you're expecting that 1099. This is your outline right here, okay? And again, looking at your expenditures and stuff, okay, yes, okay, I know I bought some chemical. Let me make sure I contact my chemical guys and make sure I got my year-end report, okay? A lot of times, in a lot of your expenses, you can contact the vendors and say, give me my printout, okay? Give me my printout. We always say it's even down to people who take medications for the Schedule A. You can contact CVS, Walgreens, all the major drugstores, all the drugstores say, give me my printout. Same thing here. If you bought seed feed, if you bought supplies, in some cover supplies, but normally, if you bought seeds, you bought fuel, these are fertilizer, chemicals, you can normally, in many situations, contact the vendor. They will give you a printout of your entire year's purchases, okay? They can give you a printout of your entire year purchases, okay? So you can have an accurate record, you know? I won't be guessing. I'm missing a few receipts. Some of the receipts are already faded. I thought I had them. I put them in the truck. I don't know where they're at. Contact your vendor. That's why it's good to keep a vendor's list throughout the year. Starting January, if you do not have a vendor's list, start writing down who you buying from. Where do I buy from? And at the end of the year, you can call and ask them for your printout, okay? Are there any questions so far? Any questions so far?
That's a really good tip, Darrell. That's something that I just started doing this year. And what a lifesaver that is when you're not having to go through your receipts or your checkbook or credit card receipt. You can just call that vendor and they'll give you one printout for, you have a mechanic shop you use all the time or a farm store that you're buying from regularly. Those folks can really make your life a lot easier.
And thank you, Chris, for that saying that, because see, we just need the total. Like Chris said, the mechanic. What was my total I paid you? The seeds, what's the total? I don't need to know I bought it January, February, March, April, May. What was my total purchase for that year? Okay, that's what we need. Okay, all right, and like Chris said, it makes your life so much easier. But we get a lot of people fail to realize you can call that vendor and get those printouts. Okay, because a lot of people don't keep great records and stuff, and some receipts do miss and stuff. We do miss that, but call that vendor. Okay, please call that vendor. Okay, all right. Now, the W-9, as I spoke earlier, Many of us going to receive 1099s, whether it's going to be in our social security name or our EIN number. But please remember now, if it comes in your social security name, that income is reported directly to the IRS as being paid directly to you. Now, as you see this W-9 form, if you say, wait a minute, I gave my social security number, I should have gave my EIN number, or you want to change anything on it, call that person prior to the issuing, because most 1099 is supposed to be out by January 31st. Okay, the legal says all 1099s got to be issued by January 31st. So please call that person, your vendors, and say, let me give you a updated W-9. Okay, so if you got your social security number on it, you can put your EIN number on it. Remember, it's either or. Do not put both. Okay, either or. We have clients that come in and say, well, I don't have an EIN number because they say I need an EIN number. You can go online, www.irs.gov, and you can get an EIN number free, and it's issued to you instantly. Okay, again, now, if you don't have an EIN number, you can go online, www.irs, put in SS4 EIN number, and you can get an EIN number issued to you free. If you need one, give us a call. We'll get one for you. Okay. But again, now, make sure you understand if you're S or you're C or you're individual. We educate people as much as we can. Try not to be individuals receiving income. Let some type of entity receive the income, not the individual, because the individual has a liability, not the entity. The individual carries a tax liability, not the entity. The individual received the money, not the entity. So we want your entity to receive money. And that's how you can structure that with your EIN number. Even if you get a new EIN number, we can always change now the filing requirements of the EIN number to meet the benefit of the person. So this is very crucial at this time of year now. Make sure if you have been given a W-9 or required to issue a vendor W-9, you make sure what do you have on it, because by January 31st, you're supposed to be having those 1099s. Okay. All right. Again, these are just form understanding your records now. If you do not have your records, you need to go back and try to get a complete year of your records, identify the profit and loss, the balance sheet, the cash flow statement, the trial balance, the general ledger. And right now, during this year, of course, if you have a P&L, this is your tax return. This is all we need, is everything that categorizes your tax return. But again, make sure you understand the balance sheets now, okay? Now, this is where everything should be, all your heavy equipment, if you have liabilities, any loans that you've taken out, any vehicles that you purchased this year, it is not going to be on the profit and loss statement. It's going to be on your balance sheet. All that you're making sure that at the end of the year now, your balance sheet is reflective of your true ownership and true debt, okay? All right, as well, cash flow statement. A lot of people want to see, what did I do this year? Looking at your cash flow, trial balances, as you go through and try to balance your debits and credit. But this is a very, very important, that general ledger now. As we going back now in a year now we can go and pull the general ledger and say, well, okay, now, I went and I pulled all my fuel. So let me go and see from January 1st to December right now, what date, what time of year did I purchase that fuel, okay? As I'm wanting to know what all my notes payable, as we say here, these examples here. But if I want to know what my chemicals are, pull the general ledger. For the ones who have the financial statements, pull the general ledger, okay? Because it's going to tell you from January 1st to December 31st, what did I spend that money on? Or when did I purchase that fuel? When did I purchase that chemical? When did I purchase that feed? What time of the month did I purchase it? The general ledger. So now, if we need to be reflective of what we spent, we're like, wait a minute now, let's get prepared for next year, because we're not going to spend this next year. I shouldn't have had this. What has been a one-time cost this year? That's how you can start establishing the budget, okay? Understanding the different entities, the different forms now. If your EIN number says that you're required to file a 1065, this is the form, this is what you're going to get a K1 form in the end, okay? All right. Now, understanding your structures and stuff, the LLCs, INCs, Now, understanding that if you are LLC, you can choose now to file sole proprietorship, partnership, or elect to be a corporation, and you still have time to make that filing, that requirement change. Okay, you still have time to make that requirement change. Okay, so if you understand it now, if I have that entity and this LLC, did I choose the right filing election? You still have time to make that change. Okay, all right, and understand this is how you're going to make effective changes to 2553. You still have time within the 75 days, which is 75 days is passed. You have to write across the top of this form, filing pursuant Rare Prop 2013-30. That way now, before the filing requirement 315 next year, you still have time to elect this year here, because you can go back to January 1st of this year now and elect to be taxed as a S corporation. You can. Now, even if you, before March 15th, if you want to file this election, you must file this form with the tax return. And now if you file it with the tax return, then you still have option to elect to be filed as an S corporation, okay? So you still got up to March 15th, you can file it with the tax return. Remember now, if you choose that election, you got to March 15th, okay, to file your taxes. You got to March 15th. April 15th is an individual and 1065, okay? All right, ownership there, again, reflective of this EIN letter now, okay? So just remember, you know, as S corporation, it pays no taxes, double taxation is avoided. You got to file 1120S, but you still file the Schedule F. You still file the Schedule F, not a tax. You're going to get a K-1 form by 3/15. March 15th is when this form is required. C corporation double taxation is avoided. So again, just want to make sure anyone that receiving 1099-Cs, things do happen in a year. You got a cancellation of debt. Don't put it on a personal tax return. Put it on a Form 982. Check the box. Discharge due to farm indebtedness, and you exclude it from your tax. Now, just remember now, things happen, okay? And people do get debt charged off. And you're going to get that 1099-C by January, it should be by January 31st of next year. But if you got a charge off, if for personal as well, but if you got a charge off due to farms, check box C, put it on a 982, you will not owe taxes on that cancellation debt charge off. And in late filing penalties you've done, file 843, which asks for the abatement of all your penalties, okay? All the penalties, okay? Again, these are other forms, and just remember, if you are paid any type of agricultural income, if you paid employees as an agricultural laborer, this form you file annually, okay? The 943, do not file a 941, okay? An annual form of 943, okay? Know what type of business center you are, getting ready for this year. Foundation will determine that tax liability this year now. You still got time to change the liability now. You still got time to change the foundation, okay? Always carry the accurate accountability. So go back and be kind of reflective now on what's the stuff, some of the stuff you did throughout this year on expenditures. You don't have the financial statements in order, but you can go back and pull a minutes receipt, go back and call the vendors and get your printouts and stuff. And just remember now, you know, just think about all the legal expenses that you incurred throughout the year. And some of you may not forgot. Some people say, I use my personal credit card. I didn't use my business account. Go back and print the credit card off for the year and highlight on the credit card statement, your personal credit card statement, what was your business expenses, okay? But remember, on your credit cards, normally on all credit cards, you can get an annual printout of your expenditures, and most credit cards now categorize your expenses for you, okay? They're gonna have a categorization. Most credit cards will print an annual, your year-end report, and it almost, if you, meals and entertainment, travel, hotels, the credit card highlights, and that is a legal receipt for tax deduction purposes, okay? All right? And all data expenditures, you know, again, all data expenditures have taxable implication in reducing taxable income. So again, now, these are all key points that we can tell you how to get prepared. A lot of people have not kept a lot of good records, but we hopefully gave you some tips today that can make that very, very efficient, proficient, and efficient in our lapses. How do we go back and get accurate accountability of our expenses and income, but more or less our expenditures throughout the year, so we can help reduce some tax income. So we won't have these big tax liabilities coming up, this year. So these are maybe some quick and easy methods to get legal documentations, legal printouts of our annual expenses, so we can utilize them in reducing tax income and save a whole lot of people some money this year. Okay.
All great tips, Darrell. We appreciate it. I do have two things I'd like you to hit for us.
Okay.
One of them is double depreciation. Can you educate us on what double depreciation would mean for our taxable expenses, whether it's equipment or things you might purchase? Can you enlighten us on that and what might be eligible?
Well, I mean, I'll be perfect honest with Chris. A lot of these depreciations have changed a little bit throughout the years. Now, if I'm understanding what you're asking, and you talk about double depreciation, are we taking our depreciation? Are you saying, are we taking our depreciation expense correctly? Or are we doubling what the expenses as the system gives us what our expenses, our depreciation categories and amount is? We're trying to.
And the allowable depreciation from year to year. And when you set up your depreciation, you can make that choice, 3, 5, 7 years, or some of them may even all at one time. But can you kind of talk to that just a little bit?
Well, what happens now is and we've been utilizing our systems for years. Okay, here's where it goes back to great record keeping. Okay, and information about your purchases, because it goes by the weight sometimes, the class sometimes. But right now, I'll be honest, we utilize our system. Once you put the information in, the weight, the class, it is going to tell you what is your election, your options for election for a period of depreciation. Okay. Now I got to admit now, we rely on our system in entering the records or the information you get in your purchases to determine what that depreciable expenses are. Okay. All right. Now, I hope I'm saying it because we actually now rely on our system but you got to have the correct information, weight, class of the item that you purchase. Once you put in, if you purchase a truck, it's going to ask you the weight, it's going to ask you the class, and that determines what the depreciation amounts are for us. Okay. Did I answer that question for you? Okay?
Yeah, no, it's all good information. I'll hit you with one more, and then we'll start reading questions off of the chat.
Okay.
One more that I don't think we touched on is individual retirement accounts. A lot of self-employed individuals are paying their own retirement. Maybe they're paying into a 401k. What is the deadline for making those retirement account payments?
Most of I want to make sure I'm saying this right. Most of them are around April 15th. As long as you get in before April 15th, you make those elections, you can make a deposit into your account. Okay. We have a lot of people coming in, and I want to make sure that date hasn't changed by April 15th, as long as you make those elections to your account. But what I want to do, I can go back and I want to get the exact date so I can give you correct information.
That's what I understand as well, Darrell. But my tax professionals, and that's what they advise me as well. As long as you make that retirement account payment or disbursement before you file your taxes, you can claim that on that tax year. So
we have had people to come in at midnight of the 14th, because you can go to the 15th, because a lot of times as long as you make that deduction in and get it in time, yes, that's what it is. You can get it in time.
Sounds great. So keep that in mind. Some of these purchases and some of these deductible expenses do not have to be made by the end of December. So Darrell mentioned on some of the other topics, we do have a little more time on some of these. But you really need to have your paperwork in line and understand, where you're at, what your expenses are, and maybe if you need additional deductions, maybe you can max out on that retirement contribution that year potentially. So
absolutely.
The record keeping is key, and all of the forms that Darrell popped up, all of those forms can be used when you're filling out your USDA disaster program assistance paperwork, your loan paperwork. So this record keeping, you can use this year after year and time after time for multiple things. And
Mhm.
you can keep that, obviously in your own record keeping, you can keep that to yourself, but it helps you when you go to answer questions on these FSA applications as well. We never know
Yes.
when a disaster is going to hit. And if
Mhm.
you already have your record keeping in place, it's going to be really easy for you to be able to describe what your loss is from year to year. Maybe you had a good year in 2020, 2021, and then here comes a drought or a mudslide or a hurricane or a wildfire in 22, and now you think you've lost half of your revenue. Well, if you have your record keeping in order and you have your taxes in order, you're going to know exactly how much money you left on the table or
Mhm.
how much your revenue decreased from year to year. So really important to keep all of this in line and keep it
Mhm.
and you can always get better. If you
Mhm.
don't have the things that Darrell laid out to us today, you can always start to plan for 24. Use
Mhm.
this information, use as much of it as you can for 23, but we all can get better. So,
Mhm.
look ahead and see what we can do differently in 2024 to make our
Mhm.
paperwork easier, to make our accounting
Mhm.
easier, make our taxes better.
Mhm.
Darrell, I want to start through some of the Q&A that we
Okay.
have here. I'll read these off to you. A lot of these are going to be for you, okay? So
Okay.
if I use my personal credit card and have the original invoice and have paid the credit card amount from my business account, do I need the credit card statement or is the original invoice acceptable backup?
Well, now the original invoice, but if you paid a credit card, I would print the statement and highlight for the business purpose up on the statement as well. Okay. If I'm understanding correctly, you have an invoice that you put on your credit card. Yes, the invoices will suffice, but I would still print that statement and highlight that charge as a backup.
Yeah, very good. Next question. How can I claim depreciation on my personal equipment that I own if I use it for the business and file the business taxes separately?
If I understand it, if how can you use your personal equipment as appreciation on the business? Long as you either sold it, or I can't say at least, as long as you sold it to the business and the business acquired it, then you can use it for the business as appreciation. If I'm understanding that question correctly, it's your personal equipment, but you want to depreciate it, okay? On the business. The business should have ownership in that of that equipment, if I'm understanding it correctly.
Okay, yeah, and if that doesn't get your answer the way you need it, or if it's
Mhm.
maybe there's a different question, just add that question back in maybe or ask it differently.
Yeah.
Next
Mhm.
question we have is we purchased a new SUV in 2023. How can we declare it for farm use and depreciate it accordingly, or what would you recommend?
If you purchase it in your name, long as the company is paying the payments on the vehicle, that can be assets of the business. Long as the farm is making the payments, that's assets of the business. Okay.
And that's where it would be important to have different accounts and different, maybe it's a credit card or maybe it's different names on your accounts.
Yeah.
That's where that would be very important, wouldn't it, Darrell?
Yes. 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 You want to make sure if you can, as much as you can. A lot of people can't. Don't have this business that maybe not been in business long enough in which it can, own or buy from a commercial. When you go apply for, when you buy your farm equipment, ask for commercial applications and let it be in the name of the business and stuff. But sometimes some businesses can't acquire it in the business name. The individual can put in an individual name, but as long as the business is paying for it, then that's still going to be considered as business asset. Now you can appreciate to that back to the business, as long as the business is paying for it. There are things you can put in place, like I can put out a lease to the business, or I can, whatever. But as long as the business is paying for it, not let's say a lease, but as long as the business is paying for it, that's an appreciation to the company. It's a business asset. Let it make the monthly payments.
And I have another question here, make sure I understand it right, but the question reads is, can that work for assets that a trust owns but leases it to a business?
Well, if 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 the trust own the assets and leases the business, that's a lease now, if I'm understanding it now. Now, when you lease it, now the trust, normally a trust don't have to file tax unless it's receiving income, okay? If receiving income, then it has to file taxes. But if the business is leasing it, they can't depreciate that lease. They shouldn't be able to depreciate that lease.
The business can't depreciate the lease, you're saying?
Because they're leasing it.
Right.
Okay. Yeah. If I understand it, you are leasing it. You're leasing it from the trust, if I'm understanding correctly. You're leasing it from the trust.
Yeah, that's the way it's written. So yeah, I think that answers that question for sure. And again, if we don't answer your question, or if you think we misunderstood, please just maybe retype that question in there for us, and we'll make sure to address it.
Yes. Okay.
Let's see. Orlando asked about the new SUV in 2023. He's asking, how would that fit onto a Schedule F? Or if when you bought that new vehicle in 2023, where does that fit in Schedule F?
Well, that vehicle, if you file it on a Schedule F, is going to be depreciated on the Schedule F because that vehicle is going to your balance sheet. Okay. If the farm bought it and you're depreciating it, that goes to the balance sheet. Okay. And the depreciation should flow through to the Schedule F. All right.
Yeah, hopefully Orlando, hopefully you understand that.
Okay.
Next question, going back to the assets that are owned by a trust but leases it to a business. They're asking, what would that flow through be for that asset that's owned by a trust? And I'm not sure I understand that one.
If I'm understanding it, that is a lease payment. That just a lease payment to the trust. But remember now, anything that you're leasing from the trust to the business, then that trust possibly is going to have to start filing taxes. Because normally a trust don't file taxes if you don't have any income coming in and out of coming into it.
And I guess making sure I clarify, and the business itself that pays the lease payment for the business would be a deductible expense, right?
Yes, absolutely. But the lease payment would be income to the trust.
Right. So yeah, and then they did a follow-up question here. It says, how can one use a holding company for said operation? So maybe if we can speak to, how would you use a holding company maybe that owns your equipment and then leases that out to different operating entities, Darrell? What would be your advice for how that should work?
I think if your holding company is owning equipment and you're leasing it to your operation, that's fine. Because number one, I would put it on a triple net lease, okay? Making sure you're paying for maintenance and taxes at the same time, okay? But if your holding company is owning equipment that you're leasing it to, that's fine, because now the assets of that holding company is not on the operations balance sheet, because now you're making a lease payment, okay? And so now you're not carrying the debt on your balance sheet. Now, on the holding side, now that's better because all the money, on this balance sheet, is also canceling out those payments because it's receiving income from the entity offsetting the cost that they're putting out. Okay. So yes, I don't see nothing wrong with a holding company leasing it to the farm or to the operation. I would put it on a triple net lease though, so I can cover maintenance and my taxes.
Yeah. And then that holding company is also going to have to file taxes as well.
Oh, absolutely. Because those lease payment is income to it, and it's carrying the assets on its balance sheet.
And I think that goes back to the original question about the trust. So they're using a trust, it sounds like, as the holding company, but just know that that trust is now going to have to file taxes because you have income.
Yes, that's the biggest, I say, me personally, drawback for having security of a trust is you leasing stuff out of the trust. Now it starts receiving income, it's going to have to file taxes too as well.
Yeah, I think we got that one answered, Darrell. make sure see if we have any others here. Does anyone have any other questions that we need to make sure that we hit? Dan, is there anything that you know of that we might have missed, or you think we covered everything?
Well, I mean, I think that, part of when we were talking and just talking about some of this year of end considerations, I know for me of, I've got a truck and I'm able to easily depreciate and to claim my entire 100% of my truck in the expenses. But there's a couple little tricks on that I don't need to do logbooks or anything. Darrell, could you talk a little bit more? Because I think that might be something for a lot of people. Now I happen to have another vehicle, and so that that's a big part of that makes it easier for me. But Darrell, you got any more? If someone is in a similar spot, maybe you got a truck that you use for the farm, you got another vehicle, you got to run to town. Any more background for people to think about, how do they approach some of those situations, and how might that help them on their taxes to really minimize their tax liability?
What percentage? Basically, what you're going to list when you're looking at depreciation is what percentage of that person's vehicle is used for the business. Okay, if I'm not understanding, that's the best way. You got to list what percentage. Is it 50%, 25%, and that determines what those appreciable amount will be. What percentage? I mean, you can have multiple vehicles in one business, but if you say this is my personal vehicle, I use it 50% for the business, 50% personal, what percentage do you use for the business?
And that's where you would have to track your miles or track expenses. Yeah. If you're using the same vehicle for multiple purposes or multiple businesses, you are going to have to track those expenses and miles. But as Dan mentioned, if you have one vehicle for business, a separate business, one vehicle for farm, and maybe you have a separate vehicle for your personal use, that makes it easy to keep those expenses separately. So definitely keep that in mind. We had one more question pop in and asked if we have any info on tribal commerce clause. I don't have anything on that. I doubt if Darrell does.
No, I don't have anything on that. But
you know anything about
I don't have anything on that.
Commerce clause? No. Yeah, we're blank.
I mean, I guess the only thing I can say is that taxation on and tribes is a complex issue, and it really, so much of it just depends on it's almost all going to depend on the exact circumstances of your situation. And there's some areas that there's even some ambiguity on it. So I think if you have a particular question on that, best to follow up, with a tax professional. And I think that, here's a good opportunity to get some of the basics, but it's always good especially when you get to those more complex situations, to really, to have a trusted tax professional. And, Darrell, I'm happy you're able to join us. I think this is an area where we do have more need especially within tribal agriculture, of people that understand both, both the farm finances, farm agricultural taxation, but then you layer that tribal side on top of it, and it gets complex in a hurry.
Okay. Yeah, exactly right. But we are pursuing and gathering more information on. I got a couple of staff we outlined that's going to be studying and going, understanding more tribal taxation and accounting. So we have staff members preparing to start training for that.
Yeah.
If I could,
I was trying to think, Nadia, if you could add some email addresses into the chat, so that if you have any follow-up, or if you have some in-depth questions like this tribal commerce, feel free to email us and we'll try to get some answers for you.
Yeah, and we can definitely do the research here, our tax department as well.
And Dan's right, though. Tribal tax can really vary from tribe to tribe even. So we'd have to really look at the tribe, the location, and the particular
reservation
we're looking at. Yeah.
Can I add two quick things, Chris, real quick on?
Absolutely, yeah.
That I want people to understand at the end of the year. One is calculating your income, okay? a lot of people, they print off all the deposit, bank statement, print off all the deposit throughout the year. But ladies and gentlemen, make sure now, if you are loaning the business money, you are utilizing credit lines or some type of borrowed funds, or someone just gave you money to put in, do not include that as taxable income. The only income that you pay taxes on is earned income. We have so many people every year. I got a credit line, I borrowed some money, I did this, I did that. That's not taxable income. Please exclude that from your overall income for that year. Okay. All right. And the other thing about an expense that a lot of people miss, people throughout the year have loaned money to the business. Well, that business by December 31st can write you a check and repayment the shareholder equity, or any monies that you put in throughout the year before December 31st, give yourself a reimbursement. Okay. Reimburse yourself by December 31st so you can claim that as a legal tax deduction. Okay. A lot of people put money in. Do not add money as taxable income if it's not earned. And if you have put money in throughout the year, if you say, do give yourself a check for reimbursement by the 31st. Okay. And that's a legal expense reimbursement in reclaiming that money you put in. Okay.
All great information. Darrell, we appreciate it. We know you've got to go to another meeting here very soon. Dan, I thank you for your time as well. And thank you for, arranging all this here as we close out the year. Does anyone have any other comments or questions before we wrap up this webinar? I think we're good. We appreciate every one of you joining us today. I hope you all have a great holiday break. I hope you can rest, spend time with family, enjoy some much needed time off, I hope, for all of you. And thank you all very much. Please reach out to us if we can help you in any way.